Let's get you some movers. Big week coming up next week with tech earnings on deck. Good morning, Romaine.
Hey, good morning. And we got a little bit of a preview of maybe what to expect. Definitely a growth story, not a growth scare, or at least with regards to some of these social media stocks. Snap earnings, that's really what we want to pay attention to here. This is the biggest mover out there based on volume. It's the biggest mover out there based on percentage gain on the day. Snap having a phenomenal morning right now, up about 17%. This is going to be the best day for the company, should this hold, going back to October of last year. And I bring that up because last year was when they had that blowout third quarter where they reported 52% revenue growth. And everyone said, this ain't sustainable. Just don't buy into this. And what happened? The quarter after that, they had sales grow 60-something%. The quarter after that, they rose 66%. And in the most recent quarter, Q2 that we're talking about, they grew 116%. This is a story not only about Snap, but really about a broader move in digital ad spending that is lifting Snap, it's lifting Twitter, Pinterest, and of course, next week, we're going to hear from Alphabet and Facebook, and most likely, it's going to lift them as well. These are your big movers on the day, and most likely, this is what's going to carry us into next week, at least as far as the tech stocks are concerned. Now, there's another story going on out there this morning that I think is flying a little bit under the radar. This is another story with regards to Chinese regulation, and now it involves a lot of the education companies over there. TAL right now down about 53% here in the pre-market. These are the ADRs. GSX Tech2 also down about 58%. All of these education stocks are under trouble right now because of a story out by Bloomberg saying that the Chinese government is actually going to force these for-profit education companies to basically go nonprofit. This would effectively completely neutralize this industry and is not exactly unheard of. Back in April, the Chinese government hinted at this. It fined a lot of these companies for what it said were unfair pricing practices. So investors had already started bailing out. Remember, TAL was down about 71% prior to today, year to date. But this is having big reverberations for a lot of the other Chinese ADRs, Didi, Baidu, JD.com, Alibaba. Keep an eye on all of those names today. A big story with regards to Chinese regulation.
Romaine, thank you so much. To close this afternoon, Romaine Bostick.